Hi and welcome to a trade of me for the 3rd of September. My name's Tom. I'm a senior trading strategist here at Trend Signal. We have a live session coming up at 7 o'clock on our intraday strategy. I wanted to go through an opportunity that I took yesterday, walk you through the process of identifying and closing out this trade, and then invite you to trade with us later on. For context, with Trend Signal, we've been teaching people to trade methods intraday and end of day since 2003. But let's jump straight in, have a look at a short opportunity generated yesterday at 11:15 in the morning on the German 40 market on the DAX. We're looking at 2-minute candles. There's a 5-step process for identifying trades. I'll go through it quickly. And then, as I say, we'll run through the opportunity. We'll look what we took. And we'll also look at the actual total opportunity that was available from this trading position. So the first step we need to look for is the black arrows. When the black arrows flip over, it tells us that we're looking for a new opportunity in the market. It doesn't mean that the opportunity that's going to be there will be strong enough for us to take, but it means we need to switch on, actually pay attention, and walk through the process. So step 2, after we've identified the flip in the arrow, we need to check the vector averages. These two lines in the middle here, which flick between green and red, they tell us essentially how momentum's looking on like a lower time frame. Over the short term, over a few candles, you can see here we move down into the red direction. The change itself isn't important, but we do need it to be red before we can begin the trading opportunity, which it is well read by about 2 minutes before the next candle flips over to generate. So in plain English, we have the arrow flip. Our vector averages are red to the left, which is required. Step 3, we need to look where the candle is compared to the normal kind of trading activity in the market. Now, because our arrow is inside this blue band, it means our candle needs to be past the midpoint of the sell channel. To put that into plain English, it needs to be lower than the purple band that you see in the middle here, which is exactly what we see on both the open and the close. So this is a valid trade from as soon as the opportunity launches. There's only 2 more steps to make sure that while we have a valid trade, it's worth taking in the first place. We need to look at the R ratio, and we need to look at the trend line of the trade. Now, what the R ratio does is it just measures how compressed the market is. If it's too compressed, it means, yeah, it could look really nice, but what's probably going to happen is you're going to spend your money to enter, it's going to move a few pips and then just pop back the other way. In this case, it's green. It gives us a value of 20.71. The value doesn't really matter too much. It just needs to be a positive number, which it is. And then we look towards the trend, this blue to orange trend line you see in the middle, the intermediate trend. This is also turned over to be orange. And once again, the change isn't important. It just needs to be orange at the time we take the opportunity. So let's very quickly rattle through those again. Arrow flip, okay. Vector averages have turned red. Candle is below the purple, which is important for this style of trade. Our R ratio is positive, and we're in line with the intermediate trend. All 5 factors are telling us that this is a good shorting opportunity. And there's a couple of different ways that trend signal traders will manage this. Now, if you want to go for the most simple version that you probably use while practicing when you first join us, you're going to be following the black arrows. You're not going to be worried about maximizing the return you make. You just want to make a safe return, essentially. You follow them all the way down. This cranks your stop loss with the trade, almost as a form of trading stop, if you like. And as soon as the candle comes back up, hits the arrow, it means we're now looking for a trade in the opposite direction. We still got to go through that 5-step criteria. But as soon as we hit that arrow as the end of the trade, you cannot take that trade any further according to the rules of the system. In this case, it was 69 pips worth of movement. We can check this by hovering over the candle. Look at the top. There'd be an O value with a number in there. In this case, it's 23755.22. DT stop, you can see it on the left here. If we hover over the candle, you can see it's 23686.06. Now, for context, the stop was about a 32 pip distance, which means on this particular trade, you're looking somewhere in the region of about a 3% return. But 69 pips, if you're trading at £1 per pip, 69 in your pocket. I mean, if you're trading on an intermediate sized account, £5 per pip, you're looking at a good few £100 just from sitting in this trade for what I'm going to guess is probably the best part of 20 minutes. Let's have a look. So it goes from 11.16 down to 11.58. So you're looking, yeah, the best part of 40 minutes there to run this trade through. About 42 minutes. If you want to see how we find these trades, if you want to, more importantly, trade alongside us, because in these live rooms, we will be calling entries, exits, managing them and pushing them further than the default black arrows that we use as a practice tool. Come and join us. We'll be doing a live session at 7 o'clock. And not only will we let you trade alongside us and show you these tools, we'll tell you everything you need to know to put these strategies into effect safely, from the risk management to the stake sizing, and even using a brokerage as well. There'll be a form around this video. Hopefully, we'll see you there later tonight.